What's going on, guys? Welcome back to the channel. It's good to see you all again. Let's talk about Redbox. I wanted to go over the Ortex, the charts, kind of what I'm watching, what I'm hoping, what I'm looking for. And then I saw a comment and it got me thinking just a little bit, and it's something that I wanted to go over with you guys. I don't know. It's probably tinfoil hat. So, is what it is. If that sounds like something you're interested in, hit the like button. I will get right into the information. So let's take a look at the Ortex. So the Ortex live, we got 77.23% of the free float. Short interest 2.73 million. Cost to borrow average 765%. So there are still shorts out there according to the utilization 88.1. All right. Now, let's talk about the charts, because the charts are kind of what matter. That's where our money is. What's going on? So I broke it down. I simplified it. I got rid of all the fib stuff. That stuff played out all the way back at the 236. We saw the bounce. Awesome. But now we don't care about the fib. We want to know where we are going from here. Hopefully up. I don't know. This area here, so we wiped out all the noise. Like I said, this area here acted as very good support for us back here a few days ago. It's acting as very good support for us here now. And what I did was I brought up this more reasonable trend line. I guess we could say that we're following. Hopefully it is bouncing off of it. So it seems to be working. It seems to be proving itself as a measure of support at the moment. So I did redraw some lines of my own, $5.50. Right now, holding okay, $5.75. Perfect. And then I would really call it $6 psychological level, more so than the 609, but hey, why not 609? All right, so that is what I'm looking at. We can see that we have not broken out of this downward trend line that we got coming down on our heads, but we are following this one quite nicely. So that would put us in a breakout somewhere in pre-market, more than likely, if it wants to work its way all the way through there. Like I said, I don't put a whole lot of faith in the aftermarket pre-market type stuff. So could this just find a place to consolidate and make it boring for the after hours pre-market for us? Absolutely. Sorry, that candle just caught me off guard. It happens every day, I'm sure. So yeah, I was just looking at what we got going on here. I want to see if it's just going to follow the trend line, trickle up, if it's going to be an interesting after hours pre-market, or if we are just going to consolidate and work it out tomorrow. I couldn't tell you. The markets, they look good, look like they liked what the Fed had to say, so everything seems to be positive overall. I didn't think the markets were having a whole lot of an impact on Redbox either way, because it wasn't really doing anything along with the markets. Like, we saw the SPY run for days, and the Redbox came down for days, but the SPY did run at the end of the day, and Redbox looks good. So we're watching to see what happens as far as that goes. Right now, this is what I'm watching, 550 to hold as support, and I would say we want that breakout above 6. I think that's really where it gets interesting again, if we can get up there and hold, because it's having a very hard time holding above that level. Now with this trend line coming down, it might give us a little bit easier to break out, bounce off of here as support, and get above that $6. So I'm hoping that that is the case. Now, as far as the RSIs go, it was looking okay. Overall, it started heating up a little bit towards the end of the day. We could see it climbing, and then it kind of just gave out there at the end, which that was a good run. So somebody may have very well, or a lot of people could have taken profits if they were like, oh, I'm seeing this area hold pretty good, see the strength come back in, drop it off, right? That's what happens. So with that, you get the RSI move. But so far, it looks like it's trying to set higher lows still on the even in the after hours. So let's see. We'll have to wait for that MACD to flip. On the 30-minute, we are definitely getting down here in the oversold territory, so it could go for another run, and I hope it does. It's going to take just a little bit of time as far as these shorter time frames go to really get that pumping, but I think it could happen. Everything looks good to me as far as the RSI is set up. So Nothing too worrisome there. Now, what I did want to talk about now, this is why. Okay, tinfoil hat, right? It doesn't mean anything. It's just a theory. It's just a thought. I saw a comment asking about, are the longs recalling their shares, or will they? And that really started making me think, yeah, they probably could, because this play could be about survival for a lot of people right now, right? So they're in deep and they're trying to figure out, how can I get out of this play? And if they don't want to throw more money into average down because they don't have that confidence, they don't know where it's going to go, then how do they get out? Well, they lend out their shares at a really high cost to borrow. And we've done videos before kind of analyzing what approximately they're paying in a cost to borrow fee a day, and I think we broke that down conservatively to about 10 cents, going from memory, just a nice round number. So every 10 days that they were holding was $1. So what that made me think was, now this is probably why people don't throw out these type of theories, because they're not the most popular opinion, but that's okay. That's not what this channel is about. It's not about having the most popular opinion. It is more so about making sure that we have some sort of idea or plan in mind. So what I did was I drew up a little bit of a share recall theory. Now, the cost to borrow math that we were just talking about at 10 cents a day, if let's say they've held those shares or had them on loan for 60 days. Now, those longs, 60 days at 10 cents, they've already gained $6 on their position just by having those shares out on loan. Now, I don't know about the bigger institutions, how much they actually get of that percentage. If they're borrowed out of your account, you see a very small fraction. So I don't know if the game's different for bigger institutions, if they have a little bit more leverage, if they can play with those numbers, and they retain more of that money. But now this is just theory because I don't know exactly what they get. But let's say they get it all, because we always go more conservative. So if they get it all, they've regained $6 on their position already just by loaning those shares out. Now, if this is a game of Survivor, if they're trying to think, how in the world do we get out of this before that meeting comes? Possibly they could have loaned them out. They said, this is long enough. Now we're going to call them back. Now, where's their average? So the highest that's traded at is $28, and the lowest it's traded at is about $2. So we split that, that's 14 bucks. So if we were to say that they had a $14 average, I think that's high. I don't think all of the longs were holding a $14 average in Redbox. So bump it down to even 12. Now, if we bump that number down to 12, if they've recouped $6 already, what do they need to get out? That's where my thinking is right now. They need $6 to get out, right? That would let them out without having any kind of burn left on them. They can walk away, dust it off, call it a day. So we saw a very large run on the 25th. We saw very high volume. Is that something that could have happened? Could the longs have recalled some of their shares that day, driving the price up? I think that was a comment that was worth analyzing. Why else? Unless the shorts just decided that, hey, we're gonna cover here, or maybe some FTDs came in that we don't know about that came in. Could be a million things, but I think that comment was worth considering. Did the longs recall their short position on that day, which would in fact reflect in the charts, right? Solid buying, running the price up. And where did the price run up to? Well, it got up here in the $6 range. Now we've seen a little bit of bouncing around here. So if somebody is trying to save themselves, then it's worth at least thinking about. What do they need to do? What's their primary concern? And if they're not worried about your account, they're not worried about a squeeze, they're worried about getting out of a trade profitable. That's the whole name of the game. So we were seeing the sell-offs on the 26th. We had 39 million on the 27th. Today we had 10 million. And then we got that run today as well with the markets, which was nice to see. So what we need to think about as well is who needs out. You know, who's trying to just get out in that respect of big money, whoever was loaning those shares, and how much do they need? How much room do they need to play with? Because you can play with this. They can play with this, and they can work their way out bit by bit. You know, this probably got them out some. This could have got them back out some. Now, are we going to see another run where it can allow them to get out a little bit more? I mean, it's a lot of shares that they're going to be turning over, so they can't do it all at once. They can't risk letting this thing drop back down. If they're, you know, if their average is 6, they collected 6, or their average is 12, they collected 6. They need this thing to be in that $6 range, give or take, just so that, you know, big money can rotate their way out. If they're passing this off to day traders, swing traders, retail, you know, they don't care about our money. And I just thought it was worth talking about, because sometimes people are like, the information comes out late. And the reason why some information comes out late is because we don't want to come on here and be the bearer of bad news, or throw out ideas like this, because all of a sudden what goes in the comments? FUD, chill, FUD, chill. So that is one of the reasons. But I do think that we just like to talk honestly about what we're seeing in the trends, and what could be some catalyst, what could be some hindrance as far as things go in the play in the charts. So that's why I just wanted to bring that out to everybody's attention. Now, I don't know if that is even a thing, but if you think about it from a logical standpoint, I think it could make a lot of sense to you, because it makes a lot of sense to me. And you know, that maybe it squeezes, maybe it does. There's still shorts out there. There's still shorts to be recalled, which could drive this up. There's still fail to delivers out there, which could drive this up. So the institutions may not even be thinking that route, right? They might just be thinking, hey, I got a free $6 and now I'm going to run this thing up who knows where. But I just thought it was worth a little bit of attention. Now, I don't think it's something that we have to dwell on or that we have to worry about unless we see it actually playing out in the charts. But I do think that this area was guarded very well. So let's just see what happens. I want to see it start chomping away at these, sorry, getting a phone call, chomping away at these levels: $5.50, $5.75, $6. We'll just call it quarter bumps. And if we can break out and above there, awesome. I think above $6 it gets interesting. Above $7.50 it gets very interesting. At that point, I think you got shorts that are going to be making a decision willingly. They don't have to hold for a whole lot longer for this meeting to come out, but as of right now, you know, it's their confidence in it being done at 67, 69 cents, whatever, is just the same as your confidence of this thing running back up. So let's see who wins. Right now, it looks like the bulls are trying to step back in. We have a nice trend, so I don't want to see it lose this trend, in all honesty. And if it does, I want to see it consolidating above $5.50. I'm sorry it was a longer video. I just said that I would throw out that little tinfoil hat theory just so that whoever's watching this channel has a little bit of information, a different perspective. We play devil's advocate. We play both sides. It's not just Moon Channel. I'm not Moon Channel. I never have been, and I never will be. I'm about trading, making money, taking money, and protecting accounts. So thank you guys for coming back, watching another one. If you don't mind, you can drop a like. You can always subscribe to the channel so you don't miss any of the updates. As always, stay golden, people, and may your accounts stay green.